Hershey shares hitting an all-time high today after beating Wall Street expectations and raising guidance for the year. The company, which includes brands like Reese's and Jolly Rancher, expects sales to grow 4 to 6%, which is up from earlier range of 2 to 4%. Joining us now is Hershey CEO Michele Buck. Welcome back, Michele. Good to see you.
Thank you. Good to see you as well.
You know, Hershey's did okay when people were staying at home and buying snacks and eating sweets from their home. Now, the increased mobility and the reopening is actually benefiting the company. Talk about how that works and what you're seeing.
Absolutely. So we're thrilled with our double-digit sales and earnings growth in Q1. And yeah, what we're really seeing is we came into the year with a very balanced growth strategy. And then we started to see some tailwinds from COVID-related consumer mobility being higher than anticipated as the vaccine dissemination really spread, and also some positive impacts from the stimulus impact. But really, we're seeing this unique period where there is both a continuance of that at-home consumer behavior as well as increasing away-from-home behavior. So consumers are participating in seasons. They are telling us they're doing more movie nights at home. They're making more s'mores at home. At the same time, we're seeing growth in our food service and our owned retail businesses, which are away from home.
Inflation is the other hot topic on all of these food company earnings and calls. You probably are dealing with it better because cocoa prices haven't risen as much as some of the other commodities. But how do you look at what you're going to do with prices this year, and how much pricing power do you think you have?
So certainly, as we look at inflation, there are two areas that came in higher for us than expected. One was around packaging, and a lot of that was due to some of the storms in Texas that impacted resin pricing and resin availability. And the other was freight. Given our very strong sales in Q1, we had to go on the spot market to get incremental freight for that volume. So we saw some incremental costs there versus what we had planned for. Relative to pricing, we have announced 2 pricing increases this year on our seasons business and our non-chocolate and grocery businesses. And we feel pretty good that over the years, we have been able to demonstrate pretty strong pricing power. We're big believers in investing in our brands, having strong value propositions for the consumer, and having good analytics to understand how to execute pricing, whether it's list price or revenue management, price pack architecture, in a way that doesn't disrupt our business. And the category has been able to weather pricing pretty well over the years.
Michele, how are you expecting the type of products that consumers want to change as reopening takes hold? And how are you kind of monitoring those changing tastes of your customers?
Yeah, so we have stayed in daily touch with consumers because the environment, as you know, has been so volatile, to stay on top of what they're interested in. And right now, we're really seeing that it is that divergence of comfort foods where people are still clinging to a lot of traditions and rituals. And for us, seasonal products are doing incredibly well. We had one of the strongest Easters in our history. At the same time, people are consuming products that are take home, at home consumption, like Twizzlers for movies, et cetera. And then also participating in, quick serve restaurants, et cetera. So we're seeing them indulge. We've seen a little bit less momentum behind better for you products, or some better for you products during COVID. But I think that all of that is moderating and starting to balance out. And consumers have different need states throughout the day and different products to fulfill against those.
Shepard Smith here. Thanks for watching CNBC on YouTube.